Know, See, Feel the Market, show number 2. Follow along as we discuss our investments and give our insight on the market. I'm Patrick, your host for the week, and let me introduce you to my amazing co host. First, from Orlando, we have Max, the chart master. And straight out of Hawaii, the man, the myth, Everson, who loves to read through company reports to find undervalued companies. Before we get started, just let me remind everyone that this show is for entertainment purposes and not investment advice. So please consult a licensed professional before investing all your money into Tesla. Guys, what a crazy roller coaster week that we had. Let me just start by saying that a lot of our predictions from last week were pretty spot on. So let's just open with Max, who predicted 3 down days and 2 up days last week, and that came to be true. So
Perfect.
Max, how did you do this week, and what did you learn?
Well, to be honest, it's not that big of a prediction. It's just really hard to have 5 bullish days or 5 bearish days. And the reason that is when the market goes down, short sellers make money when it goes down, but in order to exit their position, they have to buy out. They have to buy the stock back. So what happens when there's people buying? The stock comes back up, and that's how you get 1 or 2 days that are bullish, even though the entire week's very bearish. So it wasn't a big prediction. It's just very consistent. It's very hard to get 5 bulls or 5 bears. Now, in terms of what I did, very heavily invested in oil. Oil took a huge hit, like we talked about last week. But just, I have many ways to protect my investment. I do a lot of theta investing and bringing down my cost basis. So for the week, we were looking at about 7% gain. So that's about what I did this week. Now, I do have an eye out for silver. Silver is getting punished with everything that's going on right now in the market. It's not quite as cheap as oil right now, but I'm definitely looking at it, and it's catching my attention.
Okay. And Everson, what about you? Because I know that you made a lot of big plays this week, and it sounds like you were pretty successful.
Well, I looked at the overall market, and this is specifically in the stock market that I looked at different sectors. I noticed the popular trend in many countries where large gatherings weren't something that was famous. And obviously your airliners and cruise ships and such, ultimately they're going to get hit hard. So my bet was just to bet on the news at this point. And so I did have some puts on Live Nation. I did have some puts on TripAdvisor, and then also your retailers, your retail companies, such as J.C. Penney's, Macy's, and such. So just the overall market, and where I felt that consumer spending wouldn't happen too frequently. One call that I did was in the kind of the oil sector, a company FRO, stock ticker FRO, and I did I waged a big bet on that, and it was doing pretty good. However, this Friday, I sort of expected a little more out of FRO. We saw it dip down at about maybe, let's see, I think it was maybe about 8 to 9%. It dipped down on Friday, but it quickly came right back up. So I feel pretty confident moving into the next week that Frontline, stock ticker FRO, is going to do pretty good. To give the viewers a little insight about Frontline, it's probably my biggest position here. I think I went for a 9% gain last week. But to give you an insight on Frontline is a company that holds vessels. The last that I heard, they had a little over 20 vessels. And what they do is they hold oil. So with this battle between OPEC and the Saudis, and they're going to need to store that oil someplace. And so you would actually turn to a company like Frontline to store your oil. And you see them floating all around. There's a lot of ships outside of San Diego that store oil. And so this is a company that makes money on the lease. So I don't see this going away anytime soon. And I think Frontline has more room to run. I'm calling it maybe about $11 per share moving into the next week. But I know it will be in the $10 area. I wouldn't be too surprised if it goes to $12 per share.
Interesting. So my understanding about Frontline is that the Saudis want to flood the market with oil, right? And now with Trump saying that he wants to refill the supply, the strategic oil supply, there's going to be a lot of oil transferring ends. And so my understanding is that the Saudis recruited 2 super tankers on top of their own fleet. So yeah, shipping companies might be interesting right now. What else have you found on the market this week?
So with the puts, like I was saying, Live Nation, TripAdvisor, I've also taken to, understanding the way consumer spending works. I looked at Lyft and Uber that they've been doing poorly, and it couldn't come at a worse time for the two industry class, or to the two companies. I've seen as much as a hang on one second, let me take a look at this one here. I've seen as much as a drop of, I'd say about maybe 30%. I was up overall over 100% on the options last week. So there's a lot of declines. I don't think that even if you were able to stimulate the market with the Fed's adjusted rates to zero, and Trump authorized for Congress to be able to have that $50 billion plan. I mean, $50 billion, that takes care of the entire cruise line sector. It doesn't take care of the airlines. It doesn't take care of the, Lyft and Uber drivers. It's one industry class that it takes care of. So I think that we would see more declines on this. I don't know, especially if they make it a mandate for folks to stay in homes and quarantine in homes. I don't see a lot of people traveling. I mean, there's not really much places that you can go to in the first place, So yeah, I just don't see a lot of movement. And with that, I'm buying the news. I'm buying the news either on puts, or I'm buying the news on calls. On a positive note, though, I do want to add that I've seen, I foresee the future for companies like Philip, and for companies like GE. GE, as we know, they've been under a lot of pressure, but I hear it with people close to companies like Boeing, where the 737 may be commissioned to go back in flight, maybe around ending of April, beginning of May. So that would be a positive news for Boeing, in addition for General Electric. And now let's look at the defibrillators, right? All of those ventilation systems is something that Philip and GE produces, and we got to look for a lot of those moving forward. With the hospitals and everything, we don't know with this virus how quickly it can escalate. We've seen it in numbers with places like Iran, where they, from my understanding, had not been quarantining, and the numbers had jumped in their death toll. So a lot of nations, battling with this virus, as we know it. Europe with Italy as the most concerned, most problematic, where they have that quarantine in your own home. So I mean, this is just a reflection of what's to be expected all over the place. So unless there's positive news in China, unless there's positive news in Italy, then I say we're in a bear market still.
Yeah, so this was a wake-up call for healthcare supplies. Like, some of the supplies we didn't have enough, so now they have to ramp up. So on my end this week, I'll be honest, I got caught off guard. You remember on the podcast last week when I saw like the big drop in oil? It's very difficult when massive news like that comes up during the weekend, because you couldn't really prepare for it the day before, right? As opposed to if the news happens during the week, then you have time to add your bet. So I took a pretty big drop on Monday on my oil position when it dropped 20% overnight. So I had to follow that up the next few days with puts in the money. Calls in the money, and then I was able to make money with that. And then closer to the end of the week, after Thursday, when Caribbean dropped 30%, it reached a point where at $30, like the boats themselves are worth more than the market cap of the company, right?
That's right.
So
Yeah.
I feel like we're getting to a point where it's still going to drop possibly, but the downside is getting to be more and more limited because the company is not going to go to zero and people are still going to go on cruises eventually. I know that right now it's stopped for 30 days, but eventually people are going to go back and have cruises. Just a matter of picking companies that are going to be able to withstand the storm. And so I sold puts on at the end of Thursday, thinking that on Friday it was going to either go up or at least stay stable. And that was successful. Friday, I was able to roll down from $30 to 17 and a half, which is a pretty big, spread,
Right.
and still do that, making money on the original transaction. So just a few contracts, like nothing big, not too much risk, right? But I felt like it was worth it. And at 17 and a half, I'm pretty confident for the coming week because of the fact that even though, the cruise lines are in trouble right now, but as we said, it's not going to go down that much more. It's not, I don't expect another 50% drop over a week, right? So that was my week. And in the coming week, I'm probably going to, again, edge my big oil position, keep making money with calls, and see how that goes. We'll see how the resupply of the strategic reserve affects oil. I know that right now the futures are down, but we'll see how this week goes. I mean, the futures are down over 1,000 points already tonight after the Fed cuts the rate to zero. So how do you guys feel about that? That's like, it doesn't seem like it's reassuring the market at all. Max,
Well,
you want to?
yeah, sure. So the Fed only has one lever, and it's the interest rates. And so now they've pushed that lever all the way down to zero, meaning in the future, they don't have any room unless they go into negative interest rates, which I don't even want to get into in this show. But so now they don't have any more leverage going forward. So they've used up that entire leverage that they've had just because of this virus. Now, sure, people are dying, but the numbers aren't that bad if you're looking into it. Only 0.9% of all the people that have died actually had no chronic illness. So if you're healthy, if you don't have cancer, diabetes, that kind of stuff, this is just a regular flu, if not a little bit milder than that. So yes, things could become worse. I think there's a quote that says it's better to be over-prepared than under-prepared for this virus. But to use up that entire leverage, plus to combine that with quantitative easing again, I think we're just going to inflate the market again. So now your dollar's becoming worthless again. And that's why I'm looking at silver. It's going down in value. Plus, it's going to hedge you in the future for purchasing power. So I know I'm very committed to oil right now, just like Patrick. But I'm telling you that silver is definitely catching my eye because it makes sense now at the price, but it's also making sense for the future just because of that inflation cutting the rates. And now we don't have any leverage in the future. So that's what I saw. Everson, what did you think?
I I take note of some of your bigger investors. You know, looking at Warren Buffett, he's about 100. I think it was about $150 billion in cash. So he decided to get out at the right time. All of your big investors, they're not willing to buy in just yet. I think it's on some positions it might be a hold, but like Max is saying, I don't see markets doing too well moving forward. When I'm actually, this is just an update on the indexes for the European market. I don't know if this is old news, but I'm looking at the Bloomberg. and it was showing a positive day. Um, I think we went up about 9%, if I'm not mistaken, on Friday. But the futures looks like it's down about 4%, according to Bloomberg. But even with the Fed adjustment rate, same as Max, I don't think that it really affects anything, because going back to last week's episode, this is a health crisis. It's not a crisis, a financial crisis per se, but it's one of those bubbles that if that bubble pops, it can affect the rest of the market. So we can see it at some point affect the mortgage bubble. It could affect the banks. It could affect, and the banks are really, the banks and the lenders are really the areas of concern, because they essentially, without the banks, the whole operations won't run. So I think if anything, with regards to the federal government, the president, the U.S. Treasury, also the feds, I think emphasis needs to be on our financial system more than anything, because that's really where we get a lot of our loans to be able to sustain business, to sustain just stability. We're not even thinking about GDP growth or anything at this point, because let's face it, job numbers go down, consumer spending. No one's looking to buy a car in this type of markets. I don't think, at least I don't think so. I'm not jumping to buy a home right now. So I think we have more bad days ahead. I do agree that we're leveraging at a point where we've gone too low. But getting back to what I was saying about Warren Buffett, he's actually mentioned about a week ago that he saw the market going as low as 50%. Now, the market has dropped at least 10 to 20% already. So to see maybe a market decline of an additional 10 to 25%, I say would be reasonable. I think the market can go down a little bit more than where we are at levels here. And I don't see why not, because we haven't fully implemented home self-quarantines in every state yet. Yes, we do have the national emergency declaring fundings from Congress, but at the same time, I don't think we're at our bottom yet. I think that there's at least 10 to 20% of declines from here.
And that's the big risk, is the fact that it can spill over. Like, it started as a health crisis, but it can easily spill over into other aspects of the economy.
Mm-hmm. Absolutely.
So, for example, I was thinking of, I saw in the news a poor guy who opened a restaurant next to the Boston Garden 4 months ago, right? And that's why there's quantitative easing. They need to inject money in the market, because this guy, there's absolutely no way his business can survive with the NHL suspended, the NBA suspended, March Madness suspended. How is he going to make it to like next fall's sports season if he can't get access to loans or a credit, some sort of credit to sustain his business for a few months, right? And
Patrick,
some people don't understand.
Sorry, Patrick. Sorry to interject, but was that the guy who he's a small business owner, made sandwiches or something like this? Was that?
I'm not sure. I just saw that he opened a restaurant 4 months ago next to the Boston Garden, so he's very, very dependent on.
I think I've seen this.
The live sports crowd, right?
Right.
So that's what scares me a little bit, is that it starts as a health crisis, but it's just going to start spilling over into other areas. Because if this guy has to lay off some of his employees can't pay their rent or their mortgage, and it just goes down the rabbit hole from there. So I'm glad that the federal. Go ahead.
So you're right about that, but in his specific case, I'm sure his business is not looking to make a profit for the next year or 2 years, maybe a little bit longer. So sure, it's going to reduce his savings, but I mean, he's not planning to make a profit right now.
Yes, but we have to think about the fact that, let's ignore this specific case, right? But in general, a lot of small businesses can't sustain losses for many months, right? They aren't well enough funded. And that's why the only thing that's going to help them get through it is having access to credit. And not that many people think of ahead of time, right? Like, we seek it when we can't get it, basically, especially if the banks start to get cash strapped. And that's why the federal government is injecting money into the market, not to give billionaires like 1.5 trillion, as I've seen online, right? So we just have to keep that in mind. And how it's going to affect us as investors. As you said, Max, it's going to affect the market. But right now, the market isn't taking it too well. It's just people don't feel like that's going to be enough to support the market right now. What do you think?
Well,
Yeah, I've
that's
seen that. Uh, I'll go ahead. I Before I forget, I seen that maybe that news, or it might have been another business. I think it was on Bloomberg, but he was saying that as a business, his servers made more money than he did. They would go home with tips. They had a guarantee hourly. Uh, so it is a fear factor, not so much for your hourly employees. Yes, if you have to downsize your business, or even if you have to close your business because you couldn't support yourself for rent each month. Um, you got to look at the cost that's involved with a lot of these businesses. It's a hard market to be able to establish yourself, especially in the restaurant industry and the retail industry. So, I mean, unless you're a company, I believe, like Costco or Walmart, where you're selling products that people need and people want, uh, it's hard for people to be spending money at your local diners and things when they're thinking cost cutting. They're thinking, I might lose my job in the next few months. The companies might downsize. So it's not a time that we, maybe you're the type where you think that the coronavirus is a big deal, right? It's just the flu. Like a lot of us, or a lot of people that I've heard, um, even if it's just the flu, it will affect companies. It will affect businesses, and therefore it might affect
Absolutely.
all of us.
Yeah,
yeah.
it's the entire chain. It starts at the top and trickles down, like to the supply chain, right? So we're talking about this specific person, right? That restaurant, but it's going to affect all of the entertainment industry, for example, because they tell you try not to go to the restaurant if you don't have to. Um, there's so many sports events that are canceled right now. So all of that affects the
Right.
tourism industry. So it's just one thing leads into another, and everyone gets hurt that way. For
Right.
example, we've had so many events canceled this week. Uh, like just briefly, if you want to talk about, I know that I believe you had puts on WWE, Everson.
Oh yeah. That's one of the entertainment sectors that uh, I had put inputs on.
And what's interesting about that is that they have one of their biggest events of the year coming up, WrestleMania, right?
WrestleMania.
And the
Right.
city of Tampa wants them to cancel it. Well, they're expected to have 70,000 people there. So that's a lot of travel that won't happen, a lot of hotel rooms that won't be filled.
Absolutely.
It's just, yeah, it's a massive impact on the economy. So
Right.
when we say that it's a mild type of flu, right? But it's
Right.
not just the health crisis; it's the impact that it has on the entire economy at every level.
Absolutely.
I don't know. I'm on the
Absolutely.
other side. I'm on the other side because, uh, sure, I don't get to go to WWE in Tampa, right? So I'm not going to pay for my flight. I'm not going to pay for the ticket, for the rest of my family to come with me. So where am I going to put that money? I haven't lost that money. It's not like 2008 where you look at your property
I
value and
like where
you
you're going
lost
with
like
this.
$80,000, $100,000 basically in 2 months. So they still have that money. So now that they're
Absolutely.
not going to restaurants, they still have that money in their pocket, so they can still use Grubhub or delivery system, food delivery
Right.
companies to bring them food. They could go to the grocery stores if they're willing to go out there. So that money's not disappeared. The
Right.
the homeowner still has money in their pocket. Now they get to choose where they reallocate it. Maybe they're going to invest it into their kids and start saving for their education, college, or whatever it is, instead of going to Disney World, SeaWorld, Universal. That's all closed right now. So sure, those businesses have a lot of money to survive these tough times, but the regular homeowner is not losing out because they still have money in their pocket. And now, if you're looking at the NBA, most um, teams are actually paying for the workers. Disney is actually paying their workers to stay home.
But how
So
long
now
can they
they're not
sustain
even
it?
working. What?
How long can they sustain that?
I'm not sure, but to me, we're looking at a month, maybe 2 months more of this stuff. Um, I'm on the side that this is not a big deal. You're right, it is a chain effect, but it's not making money disappear. It's just reallocating it. And so, yeah, sure, you can start shorting entertainment stocks, but you could also start investing into health care sector. You could also go into energy, um, and then like consumer staples. For some reason, people are getting into this habit of storing toilet paper. You know, that's the big news. Where's the toilet paper? Um,
The new gold.
yeah, but the interesting thing is, every time I go to a grocery store, I'm having a conversation with the managers and the workers, and I'm saying, are your sales up? And most of them are like, no, our sales aren't that up, or maybe one specific day went up. But so it's not that they're just buying toilet paper, they're actually, they stop spending on other parts. Maybe they're buying a few less cookies or less fruits or whatever it is. So the grocery store, even though they're selling out on toilet paper and hand sanitizer, they're not making more money. So I
I
just
think
thought
I
that
have
was
to.
really interesting.
I see where you're coming from with the quantitative easing, but uh, quantitative easing only works now when people spend money. So your normal individual, your normal person, uh, you know, is not spending money in investments. Correct me if I'm wrong, but I don't see a lot of people wanting to put money into the stock market because I think oftentimes a lot of people don't know how to invest in a market. Uh, Many people, in my perspective, wouldn't even know how to short a stock. Needless to say, how to put a puts on a stock. So I see what you mean where they have the money, but quantitative easing only works when people spend money. So yes, the fear factor kicks in, and that's where we see the toilet paper spending. That's where I invest in companies like Kimberly Clark. Um, but without that fear factor, people are spending money, but they're spending money on particular products. They're spending money on food. They're spending money on hand sanitizers and such. They're spending money on toilet paper. I don't know why you would spend money on
Clorox.
toilet paper. Here in Hawaii, they spend money on rice. So rice is disappearing. But yeah, Clorox is another stock. I'm going to go ahead and write that one down before I forget. But also, now looking at the data, I think that's the important key that we haven't mentioned is the data. Now, the data can somewhat be manipulated, right? Because we don't have enough testing kits. I'll give you an example here in Hawaii. Last week they had 250 testing kits. We have about 1.7 million people here in Hawaii. You would first have to call in advance to let them know that you're showing up to these testing facilities, and then they can prepare themselves for your incoming, and then they can go ahead and test you to see if you have the virus or not. So there's the data is sort of misconstrued, and we won't find out I don't think we would find out the full impact on the data until maybe even April or May, or maybe not at all. Because how do you find out if someone had the virus but recovered in 2 to 3 days, or maybe a week, or maybe 2 weeks, right? I just heard a report on the news that said uh, that the coronavirus was not airborne, but you can catch it in the air. So I don't know if there's any truth to that, or
So
you always have.
it's through moisture. So if somebody
Right,
coughs, yeah.
right. So I mean, in essence, I think that becomes airborne, right? But there's so many facets to it. But on the upside, I did want to mention, because while we're doing this segment, I did see that the Korean markets on futures is up and gold is up. So I think off the show we were talking a little bit about how you felt that commodities was going to do pretty well with it. So I just wanted to mention that gold is up in the futures.
So let me just ask you guys something that we might be of interest to viewers. I personally don't really believe in investments that are based on a relatively short-term crisis, right? Because to me, that's more speculation.
Right.
We don't know how long this thing is going to last. All we know is what it is right now, and we can kind of presume how things are going to be in a year or two, right? So how do you guys navigate this short-term crisis. Personally, I'm doing investments that are very short-term, right? Like
Right.
I can somewhat kind of predict what's going to happen in the next week, but I can't tell you what's going to happen in the next month. So how do you guys view this like opposite factor of investing for the crisis versus investing for after that, 1 year, 2 years, 5 years out? Go ahead,
Mm.
Everson.
Well, so that's a good question. Uh, when I'm looking at the market, because it's so speculative, like you said, and because it's so volatile, I I've learned that taking it day by day is really an option that I'm pursuing. So I'm looking at day trades. I'm looking at if I do swing trade, I want to get out of my position by the ending of the week. I want to take profits as soon as I can because, like you said, and I want to be in cash as much as possible just in case there's a turnaround. I can reallocate my assets to the bull market. But like the amazing call that Max made about the week last week or this week, two up days, the rest all down days. That was pretty accurate. So if we planned out for it, and I think we had it Monday, Tuesday, maybe up days, but it was interesting to see a Monday and a Friday as an up day, and the rest just bear market. It's actually beautiful because it allows you to be able to really fulfill your positions. But like Warren Buffett says, I think his quote was, "Be greedy when others are fearful. Be fearful when others are greedy." Uh, that's that's a perfect quote for this season. Is the others are fearful right now. Now's the chance to be able to make money. Um, so as far as my position, like I said, I get in and out. As far as the year or 2 years or 5 years, I think we have to play that ear by ear because looking at this crisis, this health crisis, this will hurt your average investor. I'm talking about your investor that's maybe not too savvy with what's going on in the stock market. Maybe they jumped in
401k.
because of right. Maybe they jumped in when it was the Robinhood, move. So these are your investors that don't know how industries play, don't know how sectors really work too well. So they get in, they get bit, or they try to even play the puts and the short selling market, and then they get bit again on days where they panic. So you're going to have a lot of people that, uh, for animal terms, dog with the tail between their legs, and they may not ever come back to the markets. They may get educated a little bit before they get in, but I think the confidence has to be restored in the market, and I think people really have to begin to start to feel it out to see what to predict. But I know this will affect even the consumers. So, consumer spending on things like airliners and, people probably have a stigma now that in the flu season, I'm never riding on a cruise line. I personally would probably never ride on a cruise line during these seasons, even if it was popular seasons to take a cruise in May. I just would never do it because of the fact that you hear every year around the flu season, everyone is affected with something. So I would pick and choose your battles from here, and I would just
So
bet
Everson,
everything.
if I understand correctly, you kind of agree with me that short-term plays,
Absolutely.
based on stocks that might be affected by this, short-term or rather undetermined term
Right.
crisis, right? We try to keep it short-term, but at the same time, look for long-term opportunities for things that eventually have to go back up. That kind of summarize it?
I'll give you an example, right? And I've never talked about this during this show, but
Oh
I,
boy,
I
he's
see.
gonna give us some info here.
Get ready.
Here it is.
So
Taking
I
notes.
look at I, I look at stocks like Snapchat, and with the new generation of kids and this X generation, XYZ, all that, uh, and the millennial generation, a lot of the new um, influencers, they're jumping onto to uh, social media sites like Snapchat. And when looking at Snapchat, I personally think that it's too low. And why wouldn't you? When the advertiser base the companies still have to advertise, right? The advertiser base is still going strong there. I heard that NBC had a position in it, and they sold about 500 million of it. I think as that gets priced in, I see confidence in investors. I mean, I don't see why you would, when you have Facebook trying to buy out Snapchat at $10 per share. I think it's a cheap price. I think you get into. I'm strong calls with Snapchat, regardless of what happens. But I think that's one of the first companies to restore, because what do you have in Snapchat that requires you to essentially meet up or anything? This is all online. This is all stream based online. So I see more of the upside on companies like those. So it's not all negative news, but like you said, you look for your particular markets and what follow the trend. And I think this is one of those trends. I had a pretty good day with those calls this past week, especially on Friday. Who's to say what's going to happen in the next week? But in addition to what I was saying, you plan for short gain, but maybe put your risk out a little longer. You can look at maybe April calls and puts. So just buy yourself some time with those calls and puts. I buy short gains on day trades, maybe like March 20th. I do short plays on that for the week, just so it's cheaper. It's cheaper. You get more buying power. But those type of moves, you never want to do more than 2 to 3 days. You always want to sell out within the day, I'd say.
Let's switch real quick to Max. Go ahead, Max. Why don't you tell us, how do you see crisis investing versus like picking up long-term stocks, like at this time?
Let me interject real quick. Sorry, Max. But be careful with the sucker hour, right? They say the first hour of trading, the market open, is a sucker hour. We've seen that volatility where you have a good bull market in the beginning, and then stocks tend to trend down during lunch break when everyone's not looking, right?
Well, the amateurs start the day and the pros finish the day. But that was a great
That's
point.
A good way.
So my theory is always the concepts are way stronger than the actual underlying or stock or commodity, whatever you're investing in. And so last week we talked a little bit about my view on improving my risk reward, trying to make $3 for every $1 I risk. This week, I wanted to talk a little bit, especially for the new investors. I wanted to talk a little bit about how to protect your investment, because you don't know if you're correct with your call. So what's the first rule in investing from Warren Buffett is don't lose money in the stock market. And what's rule number 2 is don't forget rule number 1. So you want to make sure that you use specific tools to protect your investment. So if for some reason you're going into stocks, you're buying stocks or shorting stocks, make sure that you have a stop loss. And that stop loss is going to be behind your entry point. And so you can calculate your exposure to the market, how much you're risking. And now if you're actually going to be a little bit more advanced and you're going to go with options, anytime you buy an option, the value of that option is how much you're risking. And so I think, Everson, I was trying to get to see how much of that full value of the option you were considering risking, because some people will just say I'm only risking 25% or 50% of the whole value of that option. But anyways, for the viewers that are just starting out with options, just consider that full value, 100% of the value of the option that you're paying as your total risk. And especially in times like this, you need to make sure that the charts, the fundamentals, the news are going to make it possible for you to triple that.
Right.
Or at least
what's your opinion on investing short term based on the crisis, right? Like, you agree with me that people should, well, it's okay to invest a little bit of your money, like make some plays short term, but also look for those long term stocks that are going to rebound big from this crisis.
Right.
Yeah, I mean, if you're looking at long term, I told you, I've said it many times, silver, oil. If you're looking for short term, find a few safe havens, especially like consumer staples. And it's not because their sales are going to improve that much. It's because that's where the rest of the investors are going to go to protect their accounts. So you're just going to ride that wave. Now, Everson, you were talking about quantitative easing only helps when consumers spend. And so, yes, they're not going to spend in traveling, but they're going to spend their money somewhere else, because last time I checked, the average citizen doesn't save money. The average, I think, if you look at middle class and lower class, the average savings account is $1,900. People do not save. So if they don't spend money to go to a Lakers game, they're going to reallocate that money somewhere else. They're not saving it. So, like we were talking about, some of the other sectors are going to benefit from this switch. So entertainment's going to crash. And like what Patrick is doing, he's already starting to mobilize himself to pick up some of the pieces of the entertainment sector, so that once it gets back to full value, he's going to make a killing. So,
Right.
protect your investment and just try to figure out where the money is going to flow to so that other investors are protecting their money. And the other thing
So
is,
Max, sorry, go ahead.
no, so this is really important. In 2008, we had 63 to 65% of the average homeowner invested in the stock market. 63 to 65%. We went all the way down to 52%. And with what this bull run that's been 12 years, we've only gone up to 55%. We've only increased it by 3%. So what they were trying to do is incentivize a lot, 10% of the homeowners to get back into the stock market. Well, in these times, that's not happening. But we'll see. I mean, just make sure you protect your investments and use concepts. The concepts are a lot more important than where you put your money. Give me any stock and I'll make money on it because I'm going to use concepts. So, tell me a sector where it's getting pummeled and we'll find a way to make money.
I
So
like
Concepts are
that.
actually,
more important.
that lets me transition into something we wanted to talk about, which is commodities. We're both pretty invested in oil, right? And you were bringing up silver. Let's talk about silver a little bit because it's been losing a decent amount of value the past week. And a lot of people have the concept that when the stock market goes down, silver and gold go up, and when the market goes up, silver and gold like either stay the same or go down. So tell us a little bit about like what's going on with those commodities and how we should be looking at it right now. And I know that you're a big fan of silver, but if we look at the past 10 years, it hasn't really gone up much.
So this question's for me. Okay.
Yeah, go
So
ahead.
silver is always going to follow gold because there's a specific ratio, and people will always think about protection through gold, not silver. So once gold gets too expensive, then they start finding a second place to put their money in. That's going to be silver. And yes, you're right, Patrick, that when we're talking about inflation, when we're talking about volatile market, people are supposed to put their money into silver and gold. But that's not happening. And if you look at 2008, when the market was crashing, it was obvious there was a 3-year delay for gold and silver to start coming back up. So gold and silver will go down with the market for some reason because people are taking money off the board. They're scared. Then they finally get their mind back and they start trying to figure out where's the safest place to put my money. That's when silver and gold will pop. And it will pop. It's going to get overvalued. But the reason why I like silver is because I do a lot of investing through Theta, and I like to buy stuff at the bottom of the barrel. And silver is getting very close to the bottom of the barrel. Think about it. In 10 years ago, it popped at 55 if you're looking at SLV. So that's where I start building my base and just collect that Theta until it pops.
So I'm looking at silver, right? And I hear what you're saying about silver being cheap. I mean, we found its first resistance level is probably at around, I'd like to say maybe $16 per troy ounce, I guess it would be. Now we're trending lower to its next support level of $14. It's probably at about 14.3. It's holding around there. What happens? What happens after we break the resistance, or do we break the resistance level of $14 per share, or $14 per troy ounce?
Wait, you're talking about the support or the resistance?
I'm talking about a support level. We're approaching
Okay.
a support level of $14, and the last in our March trading cycle, we see on a 1 month chart, the wick is it's a strong sell for the wick as a bear market. So I mean, I say we break support level, but when should buyers have the confidence to get back in again?
So there's different ways to look at the charts to find buying patterns. But let's just say that the price is right at the support. I don't buy immediately. I would look
Right.
for confirmation that it's coming back up. Now, if you're talking
Okay.
about candlestick patterns, I'm looking for a bearish engulfing pattern. I'm sorry, bullish engulfing pattern. If you're actually looking at um, different the MACD, you're looking for a crossover, or you could also look at moving averages where the short term crosses above the long term. There are many different ways to set up your charts so that it gives you a buying signal. Once you have confirmation that this might be a support, then you can go ahead and buy your calls or buy your positions. And then if it goes up, you make money. If it doesn't, remember we talked about you have a stop loss or you have, some protection factor. That way you're only risking a certain amount. And so you're
Right.
not risking all the way to zero, if that makes sense.
Right. So I see it's kind of done that where, going with what your call was, I see it kind of going to 1460, but after 1460 per ounce, I see it sort of ticking up a little bit. So I guess my question for our viewers would be, have we sort of, with the way the charts look now, or the way the fundamentals may be looking right now, are we at a point where it's a safe place to buy in?
I don't think so yet, just because of the fact that people are using it as cash, which is what's intended, right? When the market is tough, people want their gold and silver to use as cash, basically. That's what they bought it in the first place for.
Right.
So I think that we're not there yet. As Max said, it's going to take a little while for it to actually go back to what's. I think there's still a bit of a downturn continuing for a
For
little while.
silver. Well, I just wanted to
Yeah.
add this that yeah, we're getting to a point where if it does turn around, this would be a triple bottom, which is very strong. But if you zoom into the hourly chart, my short-term moving average is still way below my long-term, and so it's not giving me that signal to get back in. But the thing is, I'm kind of like Warren Buffett with silver. I'd rather buy early than late, just because of what it
Right.
is. So you had talked a little bit about, some of the big investors weren't really going into the market, but Warren Buffett's already started to deploy his positions out there. So
Right.
I always buy a little bit behind Warren Buffett, but not too much. Um,
Right.
So let me just ask, disclaimer, we both have a big oil position, as we've mentioned before, right? But why would someone right now buy silver over oil when oil is at almost the bottom it can ever go? What do
Well,
you
so
think?
is oil. Oil is pretty cheap as well.
Yeah, I'm talking about oil. Exactly. Why would people buy silver over oil right now?
I
is
think
that
they're
for
both
me?
cheap.
So yeah, Everson's correct. Both of them are very cheap. Now, if you're actually looking at purchasing power, oil is way cheaper than silver. So that's why I'm saying that silver
Right.
is giving me
Right.
those sexy eyes, but I still have my girl right here, oil, and I'm not leaving her. Um, but so that's if you're comparing it in purchasing power. Now, silver is always going to gain value over the long term. Oil is on the opposite. Long term, it will diminish in value. Now, maybe not in dollar amount. The reason is because things like quantitative easing and cutting rates, inflation. Um,
Right. Right.
so to me, I like oil a lot better just because the premiums are better. But
Yeah,
someone could go
exactly.
with you can't make a wrong choice. If you're not very good at trading, go with silver. It's going to be safer for you. It's going to be more consistent. If you're a little bit better with oil, you're going to make some really good money. And so my rule is always, if you're a beginner, try to aim to make 1% per month. 1%. If you add it up, that's 12% a year. That's way better than the market, which is supposed to be 7%. If you're intermediate, you're aiming for 2% a month. That's it, just 2%.
Yeah, so the way I see it right now with silver is that, as you mentioned, it's very good. Like, if someone wants to start buying silver, you can sell long-term calls. It's pretty safe, right? Not too complicated. But the reason why I like oil so much right now is because I can conceivably see oil going back up 50%. Pretty easy, right? As opposed to silver, do we really see silver going to 22, 24 in the next months? I don't see it personally.
No.
But I can definitively see oil going back to $10, $12 within a few months once the economy starts picking back up, because we all agree, I believe, that the fundamentals of the US economy are strong. Yeah, we're having a pretty big setback right now, and 3 months from now, when all the earnings are terrible, people are going to be pretty angry and probably say that the stock market is terrible. But overall, the US economy is still strong, and the government is really pushing through that support for the market right now.
Hey,
So
Patrick,
that's why, yeah.
I want to interject something. You've
Sure.
mentioned about that. How much of it is priced in, though? How much of, we got the coronavirus, you got the declines in oil, you got the declines with the commodities market. How much of the economy, how much of the bad news, how much of all this negativity is priced in? And, that kind of determines where the floor might be also, right?
I
It's
agree with
overly
you.
priced in.
I'm not sure, because I believe it's priced in for the first wave, but we don't know what's going to happen in a month. Are the cases going to keep going up? How long are people going to be shut in their house, right? We don't really know what's going to happen.
Right.
So, and also, if we do break the bottom, well, then that's when the floodgates open. People are just going to keep panic selling. And then it's like the falling knife scenario. It's going to be oversold. I agree with you that it's probably already a little bit oversold, but when panic kicks in, that's when things go really bad. I always think about in 2008 or 2009 when Microsoft went down to $12. Can we really think that Microsoft is a $12 stock? Absolutely not, right?
No.
But everyone was selling. So I think that's what the danger is.
So real quick, the reason why I say it's oversold is because let's just say that all the information we have about the coronavirus, the oil, fits into this box. Then you can also add that there's a fear factor. So we are oversold by a fear factor, whatever that multiple is. And so that's why I say that we are currently oversold to what the information we have. So that just goes to Everson's question about, is it priced into the market? My answer is overly priced. That's just, my point of view.
But if it's overly priced, wouldn't we see some buyers returning back into the market at a better rate than what we're seeing now? I think I'll go to Patrick's view, where a lot of it is speculation. I mean, and it goes back to support the idea that day trading is probably one of the best options right now, right? Get in, get out while you have a chance, while you have the opportunity. Yeah. And that way too, if you're in the market at a time where there's extended bear market trend, then you can take advantage of that opportunity with the puts, right? So I'd have to go with Patrick on that one, where I do understand that it's oversold. I mean, anyone can see clearly that this is an oversold market, but at the same time, I think that fear factor isn't priced in. I think we have a lot more that we can price in on a fear factor, because what happens if we do end up self-quarantining in our homes for about 2 weeks, and then at the end of April, data becomes worse, and now we're stuck in our homes for another month. In the month of May, you don't get graduation ceremonies. That means less spending on your consumer products. How can companies survive, especially small businesses, survive off of this? And what's that number to small businesses per state? that would maybe at that point file for bankruptcy or file for some kind of national protection, right, from the federal government to sustain their small business. I think a lot of small businesses get burned in this. I think a lot of weak airliners and weak cruise ship companies, they get burnt out of this, and maybe some of them file for Chapter 13, Chapter 12, or just flat out just
Yeah, that's the chain
themselves in the
effect we
market.
were talking about earlier.
Right.
I think that now is a good time to switch over to the chart zone with our expert Max. Max,
Yeah.
this week's going to be pretty big. There's already, as we mentioned, the future is down 4.5% already. It hit the trigger to where they had to stop the futures for the night. Where do you think this week is going to go, and what do the charts say? Like, are we bracing for another big loss this week, or what's the bottom?
Well, I'm going to shock you guys that this week's going to be a 3 bull, 2 bear week. And the reason I say that is because of the news that was just released. They're going to release a lot more funds into the market, and they've reduced the rates. Just that, with the inflation alone, you'll see that it's going to make a difference. Maybe not initially. Monday's going to get pummeled, absolutely pummeled. But looking at the chart, I always like to look at the SPY instead of the actual S&P. That's just my personal preference. But I have two resistance level at 272 and at 283. So these are really, really strong. It's going to take a lot for us to get back through those levels. But at the bottom, we have a 233. So that's going to be the support. And I think we're going to bounce off of that a couple times this week. And that's why I'm willing to say we're going to have 3 bull days, 2 bearish days. I will say that the bearish days are going to be bigger than the bull days. And we might actually finish the week approximately about the same price that we're going to start the week. But that's according to the charts. And so, Everson, you were talking about where are the bulls? The bulls, I've tried multiple times to start making a defense. It's just that the bears are a little bit stronger. But what happens when a stock or, a price goes down? That defense keeps getting stronger and stronger because, let's keep the number simple. Let's say 100 bulls come in and say, you know what, this price is way too cheap for me to stay out. So they buy in, but they get pummeled by the bears. Well, the level that's cheaper than that, you're going to have more than 100 people that are willing to say, you know what, this is too cheap. So every time the bulls are putting up a defense, it's going to get stronger and stronger. And I feel like the defense is going to be way too strong on the SPY at around 233 for the bears to keep pushing back. Now, the question is going to be, are we going to bounce off of that and start coming back up? It's too early to tell, and I think that would be too bullish of a view right now. But I would at least say that we're going to start creating a channel sideways from that point of view.
So I just want to add real quick that I've seen a lot of chatter this week about people seeing, hey, the stocks are starting to be at a price where it's starting to be interesting again, because we all agree that at 29,000, like most of the stocks were completely overpriced, right? But I've seen a lot of people this week starting to look at some bargains over there. Like I was talking about Caribbean. I still think it's a little too high at 33, but if it goes into the low 20s, it might be a good play. But so do you actually think that it's going to bounce off of the floor that you're talking about? So you think that since the SPY is at 269 right now, you think it's going to go back up to 230s?
Wait, what? So you said that the SPY is at 260 right now, and it's going to go back up to 230s?
Right now.
Yeah,
I'm asking you.
It's at 269.
You said that the support's you said that the support is in the 230s, right? So do you think we're going to hit that again this week?
Yeah, I mean, you'll see on Monday, the futures are already signaling that it's going to be a big down day. And so maybe by the start of Monday, we might be reaching that level almost, probably low 240s. But yeah, that big down day is going to start the week. And we'll see, if the Bulls have cojones over there. But my bet is that they will. Now, are they going to turn around the trend? I don't have the information for that, but I truly think that they're at least going to slow down this descent to a standstill at least.
Yeah, that was my point, is that people are starting to look for bargains, right? People want to invest, but the problem is that every time the news come on, the bad news kind of puts a lid on any recovery. Like that's what keeps the bulls from actually winning, I believe. What's your view on that? Like, how do you think the news daily are affecting it?
Um, so there's a big reason why I try to stay away from the news. It's just because my point of view is it just stirs too many emotions, and so it gets people to sell their positions low, and it gets them to buy high. The reason is because they keep thinking, like, let's give it to oil. Oil drops 50%, and then people are like, oh my gosh, this is the worst investment ever, and they get out. So they just bought high and sold low.
Right.
And that's just what happens when those emotions are stirred, and that's what the headlines of news do to people. They just get them stirred up. So right now people are just so scared of what's happening, overly scared in my opinion, but they're scared, which is the fact that they are scared. And so they're just overly selling their positions. But I'm telling you, we're going to have a lot of bulls at that level, at 233, and I'd be very surprised if for some reason the Bears are able to break through that level. Now, uh, I don't know. We'll see. We'll see. I'm gonna say that this week's a 3-2. The Bulls are gonna show up. They're gonna show a little bit of moxie, and just remember that if you put a Fibonacci retracement on the SPY, I mean, it can't go that much further temporarily. Who knows what's going to happen in 2 weeks? But I'm just saying, like, we've had a lot of people that sold, and just think about all the people that shorted the SPY, or shorted stocks. In order to make a profit, they have to buy back the stock. What
Yeah,
happens when a lot of
yeah.
people buy back? The market has to come back up, even if it's just temporarily.
So do you actually see a short squeeze this week or down the line eventually?
To be honest, on the TV show Billions, they talk about short squeeze all the time. To me, I don't really pay attention about the short squeeze. I'm not really sure when they're going to start buying to get out of their positions. All I like to do is just look at the emotions in the market. The the shorters actually add a third dimension to the charts, and I'm not at the level where I can predict where that's going to be. Um, but if you're looking at if you're looking at the SPY and you're getting the SPY to cross above 275, you're going to see a lot of people getting out of those shorts positions because they're going to lose a lot of money on margin.
So I'm not an expert on charts, but what I've seen is that they're calling the bottom to be about 20,750 on the Dow Jones. What do you think about that prediction?
To be honest, I would say that's too low. That's too low, at least temporarily. Um, the reason is because, and that's what the news does. They always tell you that things are way too good than they are, and they're way too worse than they are. So that's a big reason why I try to stay away from the news, and I try to evaluate the information from the charts because it's not filtered in any way. I'm getting direct information from what the market's accomplishing. So I would say that's
So
too
the
low of a
Dow
number.
the Dow has dropped 6,000 points. But you don't think it can drop another 3,000?
So the market's going to get tired, right? It can't just go straight down to zero. There's a point, like the short sellers have to buy out their position. Now there are multiple people that will start buying positions just because they think it's too cheap. An example: Warren Buffett's already started to buy positions. So just looking at what the market's done in the past 3 weeks, it's just been a straight drop going through multiple support levels, which haven't really slowed down the market. Well, actually, they did a little bit, but I think now we're going to start seeing more of a fight from the bulls, even if it's just temporarily. I keep saying that, but it has to take a break. It's going to get tired. It's not going to keep going the same direction for a long time. It's more balanced than that.
Right. And the close, Everson, what do you see coming this week? What's your opinion on, like, what are we going to see this week?
Well, as you folks are talking, I'm taking a look at the Dow Jones Industrial Average, and on its intraday, I'm seeing it's bouncing anywhere from 2.58% to about I seen it at one point it was up closer to 3%. The S&P 500 in intraday trading was at 3.62%. I think it might be right in line with what Max is saying. As much as I've been a bear recently, and I would love to see another bear week, I think we could see prices, because you've got to look at the value of these companies. It's not like revenue is going away. It's not like earnings is just going away. Maybe we get a correction in earnings. Intraday for oil is down 20% overall, maybe closer to 30%, but that's a different story in itself. But just sticking to the stock side of everything, I do see maybe not in particular the 3 days bulls. Maybe we see maybe a 2-day bull and a 3-day bear market again like last week. But that's why we leave our technical analysts to Max. I'm more of a fundamental guy, and I'm a little biased. Like I said, I'm a bear guy right now. So I would want to see 3 days of a bear market and 2 days of a bull market. I think it's healthy for a good balance. But like I said too, in that same respects, we're very low with all of our stocks, and we're definitely oversold in a lot of areas. But needless to say, unless, to me, I'm a little different when it comes to the news. I like to look a little closely to the news, because when you look at gold, right? Gold has always been the hedge against the market. So when the market crashes, then usually the tendency is for gold and silver to be going up. Likewise, when the dollar comes into play, dollar goes down, gold and silver goes up. But lately, we've been finding that all of the sectors have kind of trailed and follow along with the same trend. So, with that being said, I got to look at the consumer and your regular investor, who's really looking to buy a gold bar or a silver bar in a term where there's a health crisis. So I think the health crisis is a little different, and I'm interested in seeing the data on how it was with the markets during the Ebola or the SARS, and seeing how long it lasted. And I know that the data is different. We've surpassed the amount, and definitely we've got a lot more people than prior. So this is a different animal in itself. But I think sentiment is still in the bear market. I think we go down at least another 10 to 15%, and then we'll see what happens from there. But I'm very big on the news. So it's a little different from you, Max. I'm very big on the news, and I think we just take it day by day, like I was saying.
I'm with you on that, Everson. I think that this week is going to go down again, sadly. Probably not as much as the last week, right? But I think tomorrow is going to start down pretty tremendously.
Maybe 5 to 10% across the board, right?
And then tomorrow afternoon, people are going to come to their senses. I predict that we're going to hit that stops. How do you call it? When they alt the market again, because we hit that trigger.
Yeah.
I think that's going to happen again tomorrow, and then during the day it's going to go back up a little bit when people cool off, right? And then I would assume that Tuesday is probably going to be an up day, but not nearly as high as the down days. So I think we're going to be trending down for the week, but again, it's going to be a big roller coaster.
Wait,
and
so
I think
that's what I was saying too. Even though I'm saying 3 bulls, 2 bearish days, I'm still saying that the market's going down. Almost 10%.
Yeah, so we all agree that we're still all bears then.
Yeah,
Right.
but it looks like I'm less
Until we see
bearish
what
than you
happens
guys.
next. So let's conclude this episode on that, guys. I wanted to thank everyone for viewing. And if you haven't yet, please subscribe, leave a comment, questions. We appreciate all of the feedback. And we'll do our best to answer some of your questions in the next few episodes. Try to be safe this week. Be careful. Don't invest more than you can afford to lose. And try to not pay attention too much to the short term. Like if you want to do some bets on the short term, we do it. Like it's not a problem. But try to invest in things that you can see going up in the next 3-5 years and be able to support 3-5 years. So I'm Patrick. I'm your host for this week, signing off, and we'll see you guys next week. Thank you.
All right, guys, have a good one.
All right.